Hey guys, welcome back to From Zero Trading. This is day 3, and today we're doing something different. We're learning the language of investing because before you can understand charts, before you can read a stock, before you can make any decision as an investor, you need to know these words or these terms. By the end of this video, you will know exactly what they mean and how they connect to each other. Let's get into it. The first up is equity. Equity simply means ownership. When you buy a share of a company, you're buying equity in that company. You own a piece of it. Think about it this way. You gave your friend $1,000 for 10% of his pizza business. That 10% is your equity. If the business makes money, your equity goes up in value. If it fails, you lose what you put in. Simple as that. Equity is just a fancy word for ownership. Next, IPO. IPO is an initial public offering. This is the moment a private company decides to sell its shares to the public for the very first time. Imagine you built an app in college and it blew up. You need $50 million to scale it globally. Instead of borrowing it from a bank, you sell 20% of your company to the public. Anyone can now buy a piece of your app. That event is your IPO. Google did this in 2004 at $85 per share. Those same shares are worth over $1,700 today. Next up is market cap. Market cap is the total value of a company. Here's the formula. Share price multiplied by the total number of shares equal market cap. Here's why this matters. Stock A costs $500 per share. Stock B costs $5 per share. Now you would assume stock A is bigger than it's a bigger company, right? But you're wrong because if stock B has 1 billion shares, its market cap is $5 billion. If stock A has 1 million shares, its market cap is 500 million. Stock B is actually 10 times bigger. So price alone tells you nothing. Market cap tells you the real truth. Number 4 is the bull market versus bear market. A bull market is when stock prices are rising. Investors are confident, everyone is buying. The longest bull market in history ran from 2009 to 2020. The S&P 500 went from 666 points all the way up to 3,300 points. A bear market is the exact opposite. Prices are falling, investors are scared, everyone is selling. In 2022, the Nasdaq dropped over 30%. Here's the easy way to remember it. A bull attacks by thrusting its horns upwards. A bear attacks by swiping its claws downwards. So bull equals up and bear equals down. Remember that forever. Next topic is going to be liquidity. Liquidity is how easily you can buy or sell a stock without affecting its price. Apple trades hundreds of millions of shares every single day. You can buy and sell instantly at any moment. That is extremely high liquidity. Now imagine a tiny penny stock that trades only 1,000 shares a day. If you try to sell your 500 shares, you might not find a buyer for those. That is low liquidity. Think of it like this. You own a rare painting worth $1 million. You need cash today. You cannot sell it instantly because there are very few buyers. That is low liquidity. As a beginner, always stick to high liquidity stocks. Number 6 is going to be volatility. Volatility is how much a stock price moves. Now, a stock like Johnson & Johnson might move 0.5% on an average day. A crypto-related stock might move 15% in a single day. Neither is good or bad on its own. It depends on your strategy and your experience. But as a beginner, high volatility means high risk. Think of it like this. A calm lake has small, gentle waves. Low volatility, predictable, easy to handle. The ocean during a storm has massive, unpredictable waves. High volatility, dangerous if you're not experienced. As a beginner, you want the calm lake. Learn to swim before you can actually surf the waves. So, now let us recap everything we've just covered. Equity means ownership. IPO is when a company goes public for the first time. Market cap is the total value of a company. Bull market means prices are going up. Bear market means prices are going down. Liquidity is how easily you can trade a stock. Volatility is how much a stock price moves. These seven terms are your foundation. Every single thing we learn from here, charts, indicators, trading setups, connects back to these words. Tomorrow, we're going to be opening TradingView for the first time, and I'm going to show you what a real chart looks like. It's going to be a big one, so subscribe so you don't miss it. See you tomorrow. Thank you.